$3,279. That is the current value of the $1,000 challenge, which I've been trying to grow as fast as I can over the last months. And last week we was into NIO, and NIO had a good Tuesday or Wednesday, pushing up to the 470s, but ending the week at $4.16. And you, my friend, you are listening to the StockInvest.us podcast, Trading Tips with Jim. And if you don't subscribe, I suggest you do so. Help me grow this channel. By the way, we are on Spotify and also on YouTube, among other places. And if you're a new listener, here is the thing. I will try to tell you what I think will happen in the week ahead of us. Last week I told you put eye on the unemployment numbers, etc. And I would say for the last half year I told you how consumer business will suffer when consumer habits change. And consumer habits, they change, they had to change, and they will continue to change due to inflation. Most of you probably notice on your own wallet you have to think twice, because inflation has been eating up your buying power, and when it reaches a certain level you have to change your habits. Nike was hit hard by that last week. Just go and check the chart, see how Nike fell. But Nike was not the first. As I told you, Starbucks and all of these other consumer exposure businesses would take a hit, and that will be the trend moving forward. How can you use this in trading? Well, if you are the tougher type, the more risky type, of course you can short a few of these major companies, but my bet is still the same. Consumer will take a hit. And reading the latest news, we can also see that the major players are slowly getting out of tech. And as I told you, I think more or less every podcast lately, the big upturn in the markets was never broad. 23 and 24 has been driven by a few stocks. And most of you probably noticed, because you are not in the major stocks, you are in the many thousands other stocks listed at Nasdaq. Looking at Nasdaq, seeing Nasdaq just going up, while your portfolio either remain just slowly moving upwards, or, like for most people, actually falling. The name of the game is to increase your profit, reduce your losses. And how can you do that? Well, we've been speaking a lot about stop loss in this podcast. It's a nice way to reduce your losses. One way to really increase your profits is to look at trend, let the trend be your friend, stay in stocks which are in an uprising trend. Helps a lot and a lot. Sometimes if you buy at the upper part of the trend, you might be sitting on a downturn to the bottom of the trend, but usually then it will start to pick up. Trend is just an amazing thing. That was the tip of the day. So what are waiting us this week? Well, it will be a shortened trading week, as Americans will celebrate 4th of July on Thursday, leaving for a closed US market on Thursday. Still, there is Monday, Tuesday, Wednesday and Friday to trade, and I believe that this week will be a tough week, and here comes the argument why. First off, everything which I've been pointing to has happened. You see how consumer businesses are struggling. Nike and Starbucks, all of the consumer, we change our behavior. These are struggling, and we've seen how certain AI stocks been moving upwards. Many of these AI stocks are very, very overvalued. They are under the assumption that the buying power, your and mine buying power, will remain the same. But competition works like this. To have a fight for first, when they break open a market, there is enough for everyone. So there is enough for ChatGPT, there is enough for Claude, there is enough for every other AI company out there. There is enough of users, and the market is still very, very young. But you will have to put, and when there is a big market, more and more competitors come, and one thing happened, they will start to push the prices down. So The winner behind all of this is, of course, those producing all the hardware needed for AI. So we see nvidia, for instance, is doing very well with their graphic cards, etc. But in general, for AI business, you have to expect that the increase in competition will cause reduced prices, and we already see this. We see Claude come out with a new version. ChatGPT has to come up with something. They lower the prices. You get more value for the money. At the bottom of all of this, the profit margin will be harder to sustain, and the growth, because most of these have a predicted growth in terms of income, has to be adjusted, because you start to face reality. Now, in the beginning, you say that, okay, ChatGPT will have $20 subscription per month. How big market is this? How many can subscribe to this? 20 million, 100 million. You just put up a number, you do the revenue stream on this, and you come up with a sort of value. But then new players come, they reduce the market, and you realize, okay, $20 might be very high. We might have to go down to 10, or we will have to increase amount of services for the $20, meaning that the production cost will be higher, because there's always a cost related to things. The beauty about the technology is that what is called the border cost, the cost of increasing one item in your production, is very, very little. Sometimes it's absolutely zero, but at some point you reach a level where you have to invest into new hardwares, etc., and you have a jump in the cost. But in general, it is quite cheap to increase one production unit within tech. It's not like many other production lines. So these will have to fight, and right now, as I said, AI is very, very highly priced. Expectations for the future income for these companies is over the top. And you heard me say that the market has been driven by a few candidates. So what do you think will happen when there will be a total logic, natural adjustment of the future expectations for the income of these companies? I'm just mentioning it. You can finish that line of thought. Another thing, so we have these big lines: inflation, the cost, and I told you that now, as we move into Q3, this is actually the first podcast in Q3, as we already are in July. Now you will see how earnings will be hit, how the profit margins will be hit, and I expect Q3, Q4 results to come in. For some companies, of course, but for some bad. But I think it will be good. All these companies, 2023, 2024, that was not able to achieve much in the stock price. Many of these companies will start to turn out to be actually somewhat lucrative, meaning that they will have a PE ratio which seems somewhat good, less risk, and I believe that even though market will go down, you will find stocks, and these will be the stocks that has been hammered over the last 3 years, suddenly start to pick up. And this will be one of my predictions over these years. You know that sometimes I've been in and out of a small company called Sumerica. They play around animal health, and how you can do analysis of blood works, etc. for dogs. Much faster in general is about animal health, especially within dogs and cats actually, but animal health in general. They are slowly making more money. It is very low. It's a penny stock, traded around 14-15 cents maybe, but I think a company like this is a typical company that might see a pickup, because the last thing people will start save on is family and pets. Pets have a high role of importance in any human's life. So we can save on a lot of things. We can save on subscriptions, but it will go very, very far before we start to cut on the items or the services we bring to our pets. So that's just a company which I think has a potential upside. Doesn't mean that you should invest into it, and if you should invest into it, do understand that this is absolutely penny stock, I just think it has a potential. Of course, I have put in some positions in that company. If now we just go and look pure technical, here was a few fundamental backgrounds why I think that markets has to have a slight correction. It's been going up. If you look at the chart, actually we can see a perfect, it's been very long since such a perfect forthcoming double top position in Nasdaq, but indicating only a slight downturn to, let's say, 17,000. So it's not much, but currently there is every indication of a double top in the Nasdaq chart, but still it is within a very, very nice rising trend. Falling down to 17,000 will be nothing but normal. Plenty of chances that it will just continue upwards if it have a correction, and even from today's level, good chance that it will come up. I had a check on the greed and fear indicators, and none of these are in such state that we see these huge falls coming. So there is nothing right now saying that, okay, we can have a huge crack in the markets. Usually we see different build up for that. We have these frantic rallies where index just goes sky high. And if that happened, let's say now we get into a frantic rally pushing Nasdaq to 20,000, then we can get into that kind of scenario. But right now it's nothing in the chart saying that for sure. The one thing that really can break the markets is if global issues start to come up. But with change in politics, we see the changing wind in politics. I'm kind of hopeful actually, because we are going to more peace-loving politic, and that should in general calm everything and even, I would say, enable for further upturn. We get less aggressive politics in, trade get back to more normal sense, and we can start build up the economy. But before that happen, it will be a jumpy road, rough road for sure. Trillions upon trillions in debt pushed into the market. Now look, if you are having a debt credit card which you have been using quite heavily, you know that you will have to pay it no matter what, and it comes at a high interest rate. Same thing is with a lot of countries worldwide. There is a lot of debt which has to be handled. Now we had the party for many years. There are reasons to believe that the party will have to come to an end, that there will be some adjustments. How it will affect the market, I don't know. What I've always said, that I believe gold will do good, as there will be a lot of readjustments in the market. Does that mean that now you can just go out of the stock market? There will be no fun now if markets go down. It is a super buying opportunity, because in the long run, the market just continues upwards. I am personally hoping for a correction, because every time there is a correction, I always invest more. And if you follow this podcast long enough, you know that I am down to only 30% investments into the market, because I think it is at a place where I don't want. I have reinvested in different other things. I bought up crypto when Bitcoin was somewhere around 30ish, added into a lot of shit coins, different things. I put money into gold at 1,600. Now gold is sitting at $2,335 after being down $2 last week. I think gold will just continue upwards, and that is where I want to be. For the 30%, as I told you, we have warmongers running the politics in the US, in Europe. And in that situation, I said it more than 4 years ago, where to put the money. Put it in war industries. When we saw the change in politics, we knew who was going to take the seat. Everything was ready for the Ukraine wars, the conflict in the Middle East, and the expected conflict around Taiwan. Everything was labeled, and I told you just go into war industry. I did myself. I know a lot of you are Norwegian listeners, and look at Kongsberg Gruppen, how Kongsberg Gruppen has been doing fantastic returns. These are following the long lines. I also told you that I thought oil would do very good, and oil are doing very good. Oil currently sitting at $82, more or less unchanged since last week, still remaining high, and why inflation will be sticky, and I believe we are in for a second uptick in inflation, despite last week showing that inflation is somewhat under control, just temporary. I will use Yellen's famous word, is just transitory. Absolutely, just transitory. And Yellen was wrong last time. I was right when I said that inflation would go sky high, interest rates would go sky high. Hopefully I will be correct about this one. I just think inflation is just transitory. For the week ahead of us, time to start to conclude. There is a few things happening, not so much economic numbers, a few numbers tomorrow. You will have job openings numbers for May. They will probably come in around 4% unemployment rate. But behind these numbers is a lot of different things. And anyone following the markets know that it's almost impossible to get a job in US right now. And companies are just laying off people. Still is not showing too much in the unemployment numbers. But the unemployment is ticking slowly upward, and it will tick at faster and faster pace. Stock market wants this, less pressure on the economy, less reason to keep up the interest rates. If interest rates go down, money will fly back into the stock market, pushing the stock market up. That is why bad job numbers is good for the stock market, but only till a certain point. More unemployment numbers you will have on Friday, where you will have earnings, increase in earnings, wages, etc. over the last year, expected to be 3.9%. And you will also have weekly job numbers, which currently sits at 34.6 hours per week, and the more important participation number, because only 62.6% of the workforce in United States is in the job market. That brings us back to the same 4% unemployment rate. The reason why this number is good is because during the last administration, they made it very beneficial to stay outside the workforce. And the only way to pay for that is either take tax money. Tax money, when you start to increase taxes too much, it goes out over production. It's a bad vicious cycle. The other way is to print more money, which is currently a solution for everything, to pay for buying voters on that side. All of this happens to every single country. It happens in cycles. Have to come to an end. There have to be some responsibility, and when that happens, you have to go through that bad period with increased employment rate. My bet is still the same. We will see huge unemployment rate. Will not be surprised if we, in 2 years, if we move 2 years ahead, we'll see unemployment around 10% in US, maybe even more. Hopefully, I will not be correct about this one, by the way. We hope that everything will smooth out. Some of you may say, no, well, there will be a change of politics. Maybe you saw the famous TV discussion and realized that, okay, media have been lying to you all the time, because it was obvious states from one of the candidates. It was very, very obvious that media have been lying when they said everything was just fine. It was never fine. It was pure propaganda. By the way, this doesn't only apply to politics, it applies to stock market and trading as well. Because behind many of the news you see is big corporate. They push out news, and you heard me say this before. Sell on good news, buy on bad news. Because if they want out, if no, the big JP Morgan or whoever, BlackRock or whoever sits on big positions want out of something, they start to push a lot of good news. They use all their media muscles, all their influence, and they start to push to offload the shares onto you, because they cannot sell a huge position without tanking a stock. So they start to push tons of bad news. They do exactly the same when they want to get in. They start to bash a stock really, really hard, pumping bad news. They fake up, they get some professor who will take someone on the side, they make him write an article, how bad things are, publish it, and trying to make a narrative of a bad situation only to get in to positions. It's very, very obvious. It's very transparent in small markets like Norway, for instance, where it's much smaller base. It's a bit harder to see in US, but it's a very, very common thing. 10-year Treasury yield went up last week. The expectations for future interest increases or high interest rates actually went up by 2% to 4.34, still remain high. Fed will give some insights to what it thinks during the week, but everyone expects the somewhat status quo. No changes at all, and the expectation is 1 interest rate cut during the year. I believe that's what they said. Have a look at the index chart. You will find it at stockinvest.us. Type in the ticker Exig or Nasdaq index. You will see it for yourself, and you will see 2 tops. Now, if market goes up, that formation will be broken. It will be rendered false. If markets continue down, has some support where it sits today, so it's a fair chance. I see even the futures are green as we speak, but if it continues down, we might have the perfect double top formation indicating a downturn technically to 17,000. Also suggested by the volume who follows the top perfectly. Buy and sell signals. Let's wrap it up before going to the $1,000 challenge. Buy signals across all signals that we, all tickers that we analyze, and we have increased by some 10,000 more, I think. Currently 24% are giving buy signals, down from last week where it was 27. Nasdaq continues a little down to 22 last week. New York Stock Exchange actually up from 29 to 30, while Frankfurt remains high at 38. Same thing with Tokyo at 41. Shenzhen China up from 5 to 9. I believe if you are able, China offers good trading opportunities right now. In my opinion, it's way too low. These numbers maybe didn't make much sense to you, but if they get too low or too high, they offer obvious buying or selling opportunities. And I usually give a warning when it happens. Been correct every single time when we get down to the low 10s, 15s, 12s, and I say this is a super buying opportunity. It has always happened, maybe delayed a week or two, but it happens. Same thing when it's overbought. We are up in the high 40s. We know that the market will have a correction downwards. I believe still for a red week ahead of us. I think that we will see the double top formation take out the potential. I see Nasdaq down to 17,000, still within the rising trend, meaning that it might just continue upwards. Slowly we are heading to Q3, and I just say prepare for different quarter results this time. Quarter results you can follow at stockinvest.us. We will warn you before quarter results will come, so just go to your ticker, and if you follow, we will put up a warning. I think it's 9 days before the quarter results come out. Will the dividend stocks be able to pay their dividends? Many of the stocks will be able to pay dividends. Energy, war, good places to be in terms of dividend stocks, because oil will remain high and war is still pushing. There is tons of contracts being written. Tons of contracts has been written. All of these agreements to fill up the storage stockpile of artilleries, whatever it is, across all of Europe and West. So the orders are in. They have orders for years to fill, meaning that they will continue to push good dividends. In the $1,000 challenge, I went into NEO, I believe it 2 weeks ago, bought NEO at 427. I said I thought it wouldn't be much that first week, but last week I told you I think it will be an upturn. And it was either Tuesday or Wednesday. I was checking a little bit, and I saw suddenly NEO go very, very fast upwards, up some 6-7%. I think it was 470s plus in the high. And I thought finally we will have the upturn that's been waiting for, because I think there is a good upside in electric vehicles. Have to remember, all of them are in a very bad downturn. First came some rebound news, and there was some Tesla, and finally then NEO just picked up on these news. No special news for NEO, by the way, pushing NEO upwards. But then NEO started to fall back. I think it was Friday, which was very bad for NEO, ending the week at 416. I have a very, very wide stop loss in NEO, and I told you why, because this is a stock which moves a lot up and down. Currently sitting in NEO, last week we had a profit of 4.56 or something, 4.5%. Now currently down 2.6% in the same position, so it swinged quite much during the week, leaving the $1,000 at $3,278.82, if to be exact. I will stay in NEO, but now it is a fair chance, because now we are pushing down to that 4 limit. If it breaks under 4, you can just expect a rapid fall. I think it was on Discord I saw someone discussing a little bit about NEO and thinking that 380 would be a good entrance level. Very, very valid argument. I like it when people argue in such way. It's very, very good. You should do that yourself. Make up your own opinion. If it pushes up, I will not be surprised if we get into a new small rally in NEO, but I really wished NEO was able to hold up on the momentum it had last week. Looking at the chart, we can clearly see that it's trying to find some sort of bottom, but it is not really established. Only when it's established and we can start to see the real signs of breaking out of the trend will be the really good time to buy. I was in a little bit early because I didn't see much other stocks doing very well, and was able to take the gamble. Still sitting in NEO. NEO is still the choice. I had last week, I told you, I think, and then NEO was 440s or something. I said I think NEO still is a very good buy. It had the upturn, now it break down below all these levels, 440, 430, etc. Sitting at 416 is a bit of more gamble. The risk reward is not as good as it was last week. I still think it's a fair chance, but it is a good chance that it will be cut by the stop loss. I have to check how it sits right now, but I believe it's some 390s or something. So it's a huge chance that we will have to take a slight loss in NEO and realize that this trade did not go well. We will see. It hangs in a thread. 28 minutes into the podcast, time to wrap it up. Not much more to say. Again, half an hour of back and forth on the markets. The $1,000 challenge, a few tips and tricks. The one first I told you was let the trend be your friend. It's such a nice, easy tool to use. Look at the chart, go to Stock Invest. We have very, very solid trend lines. If you see it's an upward trend, it will just simply help you a lot. The other thing I said was that news, there's like a common rule: buy on bad, sell on good news. Other than that, plenty of lists you can go to try to find your candidates. I would say that we are at a stage in the market where the gamble may pay off if you dare to go a little opposite of the expectations of the market. If you are a US listener, I wish you a fantastic 4th of July. Relax, enjoy the day. Training will be waiting. I will be waiting. I might not be back next week. I'm not sure yet because A lot of things is happening on Mondays. I'm not sure I will be able to be on Monday, but then maybe I will be able to put the podcast on Tuesday or Wednesday. We'll see. Expect some issues around the Monday. Until then, just have a perfect week. And when we speak, I hope that your portfolio will be a lot greener. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information you agree and are held liable for your own investment decisions.